Markets are trading with a stagflationary risk tone driven by escalating geopolitical tensions in the Middle East, renewed U.S. trade protectionism, and rising supply side inflation pressures. The dominant macro theme remains the Gulf conflict. Iran has launched fresh missile and drone strikes on U.S. military installations and allied targets across Kuwait, Bahrain, Saudi Arabia, and the UAE. While physical energy flows through the Strait of Hormuz have not yet seen major disruption, the escalation has pushed crude oil higher. Higher energy costs are fueling renewed global inflation concerns at a time when central banks had hoped for easier policy. Compounding these pressures, the Trump administration has advanced broad Section 301 investigations targeting forced labor and excess capacity practices across roughly 60 trading partners, including China, the EU, Japan, India, and South Korea. These probes carry a strong legal foundation and could lead to new tariffs, reinforcing trade fragmentation and supply chain risks. In FX, the dollar, supported by safe haven flows and stickier inflation expectations. Dollar yen has pushed through the psychologically important 160 level, drawing verbal intervention warnings from Japanese officials amid wide policy divergence with the Bank of Japan. The euro and pound are range bound, while commodity currencies show mixed performance, with the Canadian dollar supported by higher oil and the Australian dollar weighed by softer domestic data. U.S. equity futures are consolidating after strong gains, with AI optimism and earnings providing support, though higher oil, bond yields, and trade uncertainty act as headwinds. Markets are also digesting news of a potential $75 billion SpaceX IPO. Today's calendar centers around U.S. data, the ADP employment report, and ISM services PMI. Stronger than expected readings would reinforce Fed patience on rate cuts, while softer figures could revive easing expectations. Comments from Fed officials Barr and Logan will also be watched. Overall, geopolitics, tariffs, and energy prices are now competing with growth concerns as key drivers. This mix continues to favor the dollar, support oil, pressure the yen, and create a more challenging environment for risk assets than many had anticipated just weeks ago. That's all for now.